Chapter 5, Accounting Systems. Your basic accounting system basically is the methods and procedures for collecting, classifying, summarizing, and reporting a business's financial and operating information. The accounting system is going to be mainly in today's world a computerized accounting system. This right here shows a picture of what a home page would look like for QuickBooks. This is a sample company that we took screenshots of, and this right here shows all the ways that this information that is put into the system is connected. You have your employee section, your banking section, company, vendors, and customers. We create an invoice, we receive a payment, we make a deposit. We can enter time from an employee, apply it to an invoice, receive a payment, record the deposit, enter a bill, pay the bill. We can start with purchase orders, receive our inventory, enter bills against the inventory, pay the bills, chart of accounts information here. We can reconcile, write checks, use a check register. So there's a lot of different things that you can do with an electronic accounting system. This right here is a picture of the screenshot for the chart of accounts. You got the checking account, a savings account, petty cash. It's all categorized. Here's your bank accounts with the amounts there. Accounts receivable, undeposited funds. This happens to be an account that is created by QuickBooks when you have received money but have not yet formally deposited the money into the actual checking account within the computer. All of your fixed assets are listed, accumulated depreciation. You learned about that in chapter 3. You've got your security deposits. So basically this is your chart of accounts. Of course, it's expanded to show all the income accounts and the expense accounts as well. As a business grows and changes, accounting systems also change in the following 3-step process. We analyze user information needs. What does the user of the accounting software need? We design the system to meet their needs. We implement the system. So in the past with my clients, I have gone in and seen how their companies operate, see the needs that they have. I've used QuickBooks and set up the system to be designed around their specific needs, and then we would implement the system. We would then monitor the system, and then if things needed to be changed, we would go back to the design and then implementation again. Internal controls are the policies and procedures that protect assets from misuse, ensure that business information is accurate, and ensure that laws and regulations are being followed. Processing methods are the means by which the accounting system collects, summarizes, and reports accounting information. These methods may be either manual or computerized. The screenshots I've been showing you from a computerized system. The work that you do on paper and submit to me for grade, would be considered a manual system. Now, there's a large number of individual accounts with a common characteristic that can be grouped together in a separate ledger, and that is called a subsidiary ledger. The primary ledger, which contains all of the balance sheet and income statement accounts, is called a general ledger. You're used to working with the general ledgers. You've been posting to the ledger after you journalize. That's your cash account, accounts receivable, accounts payable, and other items. Each subsidiary ledger is represented in the general ledger by a summarizing account called a controlling account. The individual customer accounts are arranged in alphabetical order in the subsidiary ledger called the accounts receivable subsidiary ledger or customer ledgers. Individual creditor accounts are arranged in alphabetical order in a subsidiary ledger called the accounts payable ledger or creditors ledger, or in business terms, vendors. Let's take a look at what a customer ledger looks like. This right here is in QuickBooks again, the same sample file we looked at earlier. And you can see that it starts with all of the customer accounts and it lists them again in alphabetical order. And this particular company has customers and then specific jobs created underneath the customers. So when you click on them, you can see all the information for that particular customer over here to the right. Every invoice and payment, sales order, sales receipt, estimates, anything that's been done for this particular customer, when you click on them, will show here. So on and so forth. It also shows the balances for each one of the accounts. Now, we take the balances of all accounts, receivable accounts for the customers, add them all together, and that creates accounts receivable. This right here would be your vendor ledger. I realize it says customer here. However, this is your vendor ledger or your creditors. Again, listed in alphabetical order. You can see the account balances next to them. So all of these individual totals total up to be accounts payable. We have special journals. This is one method of processing transactions more efficiently in a manual system is to use special journals. Special journals are designed to be used for recording a single kind of transaction that occurs frequently. The all-purpose two-column journal, called the general journal, is simply the journal and can be used for entries that do not fit into any special journals. The revenue journal is used for recording fees earned on account. Cash fees earned would be recorded in the cash receipts journal. Purchases made on account are recorded in the purchases journal. All cash payments are recorded in the cash payments journal. The purchases journal is designed for recording all purchases on account. So in a computerized system, this would be basically the equivalent of entering a bill. And this is what it looks like. You enter the vendor's name here, the date you received the bill, when the bill is due, and down here is where you tag the expense line. So in this particular case, CU Electric is applied to the utilities expense account, more specifically gas and electric, for $150. If you wanted to do multiple line items, then you would do multiple. I want you to think of this as kind of like the journal. When you do a journal entry, we enter a debit to utilities expense and a credit to accounts payable. That is the same thing as entering a bill into the computer system. The revenue journal are normally recorded to the revenue journal when the company sends a bill referred to as an invoice to the customer. Each invoice is normally numbered in a sequence for future reference. So this is an example of an invoice. You've got the customer's name, the date, all the information. There's the invoice number, bill to the customer, and then each item of the invoice is listed here. If there's any sales tax, it would be applied, and then it's got the balance due. And this right here is an invoice. You would save and close it, print it later, mail it out to the customer, and this is the same thing as entering a debit to accounts receivable and a credit to revenues. Cash receipts journal. This is for all transactions that involve the receipt of cash. They're recorded to the cash receipts journal. Every entry recorded to the cash receipts journal will involve a debit to the cash column. Debiting cash increases it. So, of course, anything that says cash receipts means we're going to be debiting cash. So, if we're looking at customer payments, which would be the receipt of cash, we can pull up the customer's name, the amount that they paid, put the information in, and then we check out the invoice that they're due for. This would be one method of receiving payments that would also apply to the cash receipts journal. With the cash payments journal, all transactions involving credit to cash are recorded to the cash payments journal. So when we credit cash, that means that we are reducing this account, decreasing it, and we're actually paying for it with cash. One way of looking at this would be to look at the pay the bills screen within the cash payments journal. So we would select the bills that we wanted to pay, select how we're going to pay them. and then we would pay these bills. This is a total of all bills due. This is the total of bills that we've selected to pay. This would apply to the cash payments journal. A computerized accounting system has the following three main advantages over manual systems. One, the computerized systems simplify the record-keeping process by recording transactions in electronic forms and at the same time posting them electronically to general and subsidiary ledgers. I can tell you, out of 15 years of doing accounting, I use computerized accounting systems every single day, and the difference between doing accounting on paper and doing accounting in a computer, in some situations, will make the user lazy. You're learning about journals and posting to the ledger, and you see the whole flow of information, how it happens. The computer does all the posting to the ledgers and updating reports, and it generates all these reports for you by a click of a button, and sometimes you forget all that back information and where things go. So it's very much important to know manual accounting so you can understand the computerized accounting system much better. Second, the computerized systems are generally more accurate than manual systems. Computerized systems will not allow you to record out-of-balance journal entries or out-of-balance transactions, and that is definitely a good way to make sure that you are being a little more accurate. And number three, computerized systems provide management with current account balance information to support decision making, since account balances are posted as the transactions occur. Those of you who are in management, you'll understand that a lot of the reports that are generated are generally used for management purposes, and so we can make certain decisions about the profitability and continuance of certain business. So let's just take another overview of some more screenshots of a computer system. This right here is the checking account, and this is just the register that shows the list of all the checks and the running balance of the checking account. Very similar to looking at a ledger for the cash account. It's very important that we know at all times how much money we actually have on hand. This right here would be a deposit screen. This is where we make deposits, formally depositing money that came in from customers, or you might post a investment from an owner here or anything else. However, this is the deposit window. Again, this is just another snapshot of the check register. This right here is how you actually write checks in the computerized system. Great thing about it, it looks like a check. Down here is where you tag the expense line that you're wanting to apply this check to. This could be applied to a liability or anything you want it to apply to, as long as it's correct. This right here is the reconciliation window, clearly different than the reconciliation that you'll learn in a later chapter. This particular module helps reconciliation be a breeze. You simply plug in the information, you go to this screen and check off the checks that have cleared, check off the deposits. You can see your total deposits and other credit screen, checks and payments, and then if you have a service charge, it's there, any interest earned. And once you get down to a zero difference, then you know you have completed the reconciliation and you can reconcile now. And this right here is an example of a report that would be printed out of a computerized system. I chose the profit and loss report because this is the first financial statement that you learn to create. Profit and loss in the real world, for the book purposes, they call it an income statement. This shows the revenues, cost of goods sold section, gross profit, all the expenses, and any type of other income or other expenses for a total net income. Now, with the use of computers, we have what's called e-commerce. Using the internet to perform business transactions is termed e-commerce. When transactions are between a company and a consumer, it is termed a B2C, business to consumer e-commerce. And this concludes your lecture for Chapter 5, Accounting Systems. Please continue your studies.